Welcome, welcome, folks. It is our final stream of 2022 here, where we're going to be going over several different metrics in crypto. As always, thank you to everyone who's tuned in. Remember that this is a show that is based around looking through data and objective metrics to figure out exactly where markets will be going next, based on as much historical evidence as we have. We are not here to give investment advice. However, you can ask your questions and we will try to find divergences for specific assets you're looking into and try to make the best case for what 2023 here is going to look like. It's been a rough 2022. Officially, it was our hardest pullback since 2018, at least in terms of Bitcoin's price. 2018 barely beat it out, actually. Bitcoin dropping about 70% from its all-time high that it was seeing in November of 2021. Many people have dropped out of the markets, and that's reflective in our shows. The amount of engagement all over any Twitter account. But for those of you still here and are watching, it typically is indicative of people who are patiently waiting it out and have probably been through a few of these market cycles before. We talk about the halvening happening every 4 years. 2020 was the last time, and you saw what prices did then. Our next would, of course, be 2024. So if math does things right, we're looking at 2022 kind of being in the same boat as 2018, where it was a rough time, as mentioned. Now, 2023, the argument is, could it be like 2019, where through the majority of the year, it was a lot like 2018, but it did start to see some signs of life in the tail end of it, leading up to a very, very good 2020 after the pandemic hit and the world kind of changed and flipped on its head as we knew it. So, of course, not every 4 years are going to act the same way, and there's going to be tons of external circumstances. This year, we saw many, including the continued COVID worries, the Ukraine-Russia conflict, the inflation and recession fears, and the Fed interest rate hikes, pushing interest rates up much higher after 2020 and 2021 were filled with extremely low interest rates that allowed tech companies and crypto that benefited from a good equities market able to thrive because of that. So here we are reflecting on a very tough year, and we'll look at kind of some year-long stats to do a little bit of recounting of everything that's happened. But of course, the latest news with Sam Bankman-Fried being imprisoned back in the US and then released on $250 million bail as of yesterday. That's definitely rocked many crypto traders. I don't believe it really impacted markets in any way. We saw some volatility, but I think it's mostly just due to equities being very shaky at the moment. But regardless, it's certainly an interesting story. And long term, a lot of people are questioning whether Sam's release for objectively, defrauding millions of people will potentially hurt the integrity of crypto and allow other fraudsters out there, which undoubtedly there will be more, to feel comfortable and know that if they have enough money, no matter what crime they do, financial crime that is, they can be bailed out because of the fact that they have become so wealthy through their fraud. So there's a little bit of irony to all of that, and it's not my place to have an opinion on it. I think most people's opinion is it leaves a pretty bad taste in their mouths, and I would have to agree with that. But it's, as a data platform, it's probably a conversation left for another day. However, I am very interested in your thoughts about it, and you can always feel free to leave comments in our chat, because we are a crypto company at the end of the day, and all of this external news is, of course, relevant to what we do on our platform and how markets are able to fluctuate up and down. We've seen firsthand just how much all of this real world news has impacted markets that many have proclaimed over the past 12 years, 14 years even, is pretty immune to what's happening externally. Obviously, that's not the case. So, all of that said, let's take a look at how price returns are shaping up over the past week, and it's kind of a continued trend from what we've seen for a lot of December. It's flat Bitcoin and Ethereum. Over here on the left, we've got Bitcoin down 0.8%, Ethereum up 0.9% over a 7-day period. That's pretty much break even as it gets. But as we get over here, we see Cardano down another 9%, Polkadot down 11, Solana down 10. These are some of the biggest altcoins out there, and it only gets worse as we go down. We see Algorand down 16%, Filecoin down 23%, Elrond down 14%, Chili's down 18%, Trust Wallet token down 20% after it had a huge run over the past month prior to this past week, with CZ, shilling Trust Wallet, and a lot of people flocking to self-custody after the trust and exchanges took a major hit. Decentraland down 14%, Aptos down 15%, eCash, Neo both down double digits as well. So clearly a rough week if you're an altcoiner. If you're sticking around in Bitcoin, Ethereum, and stablecoins, you're doing fine, and you're mostly just sitting there twiddling your thumbs waiting for something to happen. We can look at a few polls here that are showing how the markets are really feeling right now, and where traders' heads are at. And I asked here, of the available options, what Bitcoin price would be the closest to your target for being all in on crypto, assuming there's no money in stable coins. And it looks like about 2/3 of people are waiting for prices to go lower before being all in. Now, mind you, being all in is a pretty extreme position to be in, and many people just don't want to be all the way in for the purpose of having some what they call dry powder. But regardless, you can consider this question kind of a relative question. When are you planning to put in as much money as you're comfortable putting in? And most people are saying $10,000 is the closest target price for them of these available options. Almost a fifth of them are actually saying they're waiting for $5,000 or less, which is quite surprising to me. I think it's certainly a possibility that prices could go that low. But we've seen so often when there's a huge market drop, people just assume that markets are going to keep dropping all the way until the price that they are feeling very comfortable and ready for putting in their money. And so often I hear stories of people that have a bunch of market orders set at a specific price, and it almost gets there before bouncing and then going to a new all-time high within the next year. And they're sitting there with all of their fiat money ready to put in that they never got to. So that's obviously a learning lesson for people who've been there. And even if you haven't been there, trust that does happen to many people. Now, on the same end, we can see that a little over a quarter of the survey participants say they're already all in at the price that it was at when I asked this question, and it's pretty much still at around 16.6K now, even though it's been about a week. And also notice that about 8% of people are actually waiting for prices to go higher than they currently are, which is, the buy low, sell high mantra is well known by almost everyone who's watching this show. But there are still a lot of people who are of the mind that they need to see resistances get broken in order to feel comfortable that a bull run is now underway. And there's nothing wrong with that, to each their own. You're obviously not going to buy at the perfect time if you're waiting for prices to go higher and using that as a validator that prices will no longer go lower, right? It sounds a little contradictory, but that's exactly why that option was put out there. I had a feeling that some people would feel that way, and it's certainly a less risky proposition if you are waiting for a little bit of a bump in market price before actually going all in or putting in a significantly larger amount. So that's just, this really conveys how different people's market strategies are. And I find it fascinating, and maybe we'll ask it again in a couple months and see if the percentages have differed greatly, assuming prices are still around the area that they're at. Now, another question that we asked was about Ethereum. And this is just straight up about Ethereum's market price and whether it will ever return to prices that it was sitting at about roughly 3 months ago, right around pre-halvening. And that was the $1,500 plus level. Currently, we're actually at like 1215, 1220 now, so barely anything's changed in the last couple of days. We asked what the current market, when will Ethereum's market price regain the $1,500 plus level? Within 3 months, 3 to 12 months, 1 or more years, or never again. Now, 17% believe that Ethereum will actually never, ever get above $1,500 again, which is, you know, surprising. But considering the year that we've just had and the recency bias that some people share, it's certainly not the most shocking number out there. I probably would have expected it to be a little lower, but you know, that's a 20%, about 25% rise from where prices are now, and we haven't seen a 25% rise from Ethereum in quite some time. And then, you know, the most common, I kind of expected the most common to be 3 to 12 months, and that's exactly what we saw. You know, within 3 months, that would be late February, or I guess late March, excuse me. And then most people believe that between late March and December of next year will be when $1,500 plus levels will happen. So this is kind of a cautiously optimistic result here. It looks like a lot of traders are interested in, you know, or I should say, expecting that $1,500 will be breached again, but not in the near future, just down the road sometime in 2023. And that's probably the most fair assessment, and one that if Maxim was here, he would probably agree with. All right, so that's just a little sample of how the market is feeling right now. Let's also take a look at how the buy versus sell calls are going right now on crypto platforms like Twitter, Reddit, Telegram, Discord, things like that. The blue lines here represent buying, bottomed, or bullish. I love that all of those start with B, but it's just coincidental, of course. The red lines are sell, selling, sold, topped, or bearish. And you'll notice there has been a bit of an uptick in both, but you know, if we actually showed the proportion between buy versus sell here, it would show that the sell bias is starting to grow relative to the buy bias. And we see evident, I mean, look at here when we were around the same levels of blue bars, but the red bars were significantly lower. You know, this is probably a 30 to 50% rise in the red bars without the buy bars being significantly more than they were here in October. To me, that's significant, and it is showing that there is more of a skeptical, FUD-esque kind of bias going on right now. And that is a good sign for those of you who've been on our shows before and watched these streams. You know that we believe strongly, and we've data backed this, that markets tend to move the opposite direction of crowd expectation. So if the crowd believes wholeheartedly that prices will go up soon, or this is the dip buy opportunity, it's more likely not the dip buy opportunity, and prices might have a little further to fall. On the other end of the spectrum, if traders believe that we are about to plummet down to 5,000, and then, you know, everyone's going to put in their money, usually means that 5,000 is never going to be reached, and we're going to have a turnaround before that ever happens. So keep in mind the fact that all of these sell calls are starting to creep up right now, and you know, understandably so with all this news. Going back to the FTX stuff that happened back here, the implosion really rocked the markets a lot. And when over 5 million people lose funds from a top 10 exchange in the world, it's absolutely going to have an effect on market price. And then, of course, the Fed made their announcement right here, December 14th and 15th, I believe. And that is when we had another retracement, and we've been flat ever since. Markets today, by the way, are fairly even. And we can look into that, actually. I wanted to make sure to show that the correlation between the two is definitely showing once again. So as promised, we're going to kind of look at things from a year-long retrospective. And this is a perfect way we can do so by looking at the correlation between Bitcoin and Ethereum versus the S&P 500. And of course, we have gold out here too, because gold is still considered to be a hedge toward the S&P 500. And many refer to crypto as the digital gold, and something that will eventually replace precious metals, which is very debatable. Regardless, what we can see here is a pretty tight correlation between the S&P, Bitcoin, and Ethereum throughout the year, followed down, slight bounce here. They both plummeted. This was during the prime time of the Fed really dropping the hammer on raising interest rates and pushing the markets down as a result. Further down here, eventually we see a little bit of a climb, and boom, look at this separation. Really the first time all year we saw anything significant outside of maybe this positive climb in August where things went up a lot and crypto did not go up a lot. But this was a complete inverse correlation for a short period of time, and it happened right when the FTX implosion happened. I'll zoom in a little just so I can illustrate it better. Now we're looking at pretty much the last 2 months or so. We have crypto actually climbing here in November while the S&P is falling, which is quite interesting. And then all of a sudden, we see the opposite. We see the S&P start to rise on the 7th and 8th as FTX news breaks, and Bitcoin and Ethereum fall off the face of the earth. From its top, from November 4th down to November 9th, we saw Bitcoin drop 25%, Ethereum drop 33%. We really saw just a lack of any sort of bounce here throughout November, while the S&P and gold started to take off. And eventually, here in December, we've started to see a little bit of a climb before the Fed pushed things right back down to just below 17K for Bitcoin, and Ethereum being just over 1,200, where things have really just been ranging in a kind of a boring fashion for traders over the past week. But remember, this is just Bitcoin and Ethereum that have been flat, and altcoins are mostly bleeding. So even though it may look like crypto is doing kind of treading water at the moment, the overall market cap within crypto is starting to get siphoned out, and that's still a concern. Typically, when we see altcoins start to bleed dry, and I personally remember this before being a part of Santiment. This was back in 2018. Let's see. Let me actually show this template. So typically, conversations start to flow toward Bitcoin once again, as traders start to go into the relative safe haven of Bitcoin. I know Bitcoin is not a safe haven, but compared to Dogecoin, for example, or a much more volatile asset, Waves, Bitcoin is less volatile and tends to hold up better, especially in bear markets. But there's been an interesting occurrence of kind of almost trader defiance, where they don't want to capitulate and go back to Bitcoin yet. And of course, I'm generalizing. Many people are in Bitcoin, but I'm just talking about what the statistics show compared to normal. It's revealing that a lot of people still aren't talking about Bitcoin the way they would, and this is with the assumption that greater talks about Bitcoin is reflective of more people trading back into Bitcoin, and there is a definite evidential correlation there. So, yeah, as of what we've seen recently, we were starting to see a little more interest. We actually saw a little bit of a rise above what we consider to be the health line, where anything above is a good amount of discussion related to Bitcoin that typically pushes up prices. Exhibit A right over here. Once we went high, bottoms started to form and prices started to climb. And then as we went low, things started to go south. So yeah, we were seeing a little bit of a rise. And then December kind of stagnated. We had the Fed. Oh, it's interesting. It cuts off on the 9th. Let me refresh this just to get the latest. There we go. So yeah, we had the Fed make their announcement right around here. It very temporarily put up the discussion as things were bottoming out toward Bitcoin. But it's kind of just gone right back down to not a lot of interest in Bitcoin, people chasing pump and dumps, finding the volatile assets that might have some pump going on, and everyone flocking to it to try to claw their way back and earn back some of the losses that they experienced throughout 2022. So I find this interesting because going back to 2018 and 19, what eventually helped the bull run start again was the fact that people eventually gave up on the bleeding altcoins, going back to BTC, and the market cap growing in Bitcoin allowed the eventual push up of prices. People got comfortable enough to start dabbling in altcoins while being cautious about it. And that's kind of the ideal setup that we look for when it comes to crypto bull runs and growth in market cap. So I still think this metric right here is key. We need it to improve. We need to start seeing Bitcoin interest rise back to healthy levels once again, and that'll be a great sign that things can move back. And while we're here on this template, a few other things I can cover. Ethereum continues to look okay in terms of the key sharks and whales. This is a wide sample of addresses that hold anywhere between 100 to a million Ethereum. And that's in total about 2/3 of the total supply held by these addresses. But evidence has shown that when this group grows, prices against Bitcoin tend to grow as well. So if you're looking for price dominance of Ethereum versus Bitcoin, this is one of my favorite metrics, and several other staff on Santiment as well, that shows validation that Ethereum can be a superior investment to Bitcoin. Typically, you don't see this kind of growth if Bitcoin is dropping off a cliff. So usually it's the overall price of Ethereum growing, not just Ethereum's price versus Bitcoin. And yeah, I mean, you can clearly see when the dump started right before the merge, which was right, get out my handy dandy line draw here. So right here is where the merge happened, and look at the dump off just a couple days before that merge happened. And yeah, the price started falling right away against Bitcoin. Eventually we saw a little bit of a bounce, and then they started to accumulate here. And the price of Ethereum versus Bitcoin has kind of stayed flat, but I'd consider this a good sign. The fact that Ethereum sharks and whales are accumulating once again. If it starts getting way back up here, 67% plus of the supply held, to me, that's at least a short term for now, a good leading indicator that Ethereum can rise quicker than Bitcoin. But we're not quite there yet. I do still think this is a good sign, though, this accumulation over the last month and a half or so. Now, heading over to Bitcoin and stable coins now, we can see that the 100 to 10,000 Bitcoin addresses are kind of staying stuck in the mud. Now, these are all whales, and I'm also going to show 10 to 100 Bitcoin in just a moment. But you can see how there was a little bit of a climb here. Prices actually got up to about 17.7, and then they started to drop off. One more push up and drop off again. So it's kind of staying flat. But the good news is, if I zoom out here to the last year, we'll even do 2 years. The good news is that this drop off that started all the way back in late October 2021, 14 months ago, it appears to have stopped, at least for now, about 1 month ago. And since that time, these whales are still kind of on the rise more than they are on the fall. Over the last month, they've reobtained about 0.15, 0.16% of the overall supply of Bitcoin, which may not sound like much, but it is. That's several tens of millions, if not hundreds of millions of dollars. I want to say hundreds of millions. And overall, they've added about 0.35% back to their bags. Certainly not significant, and you can see pretty visually that there's a long way to go for the accumulation to start reaching the levels that they had back in late October 2021. But it is a good sign, and if nothing else, after a 13-month dump, it's at least temporarily coming to an end. And we haven't seen any sort of extended flat or accumulation behavior from these whales since that dump started. So this is significant. And as I promised before we look at stable coins, we take off this for a moment so we don't get too busy on this graph. And we're going to add the 10 to 100 Bitcoin addresses, which are absolutely still sharks and whales in this category. This is the pink line. Let me make it an area chart so it stands out a little more. Look at this. Look at how much the 10 to 100 BTC addresses have been accumulating since early June. So a little over 6 months of accumulation from them from the bottom when they were holding the least up until now. This tier of BTC addresses have added about a little under 0.75% of the overall available supply of Bitcoin. That's a lot. And they've added about 3.26% more Bitcoin to their bags, which really started right before this final dip. You can see they got super aggressive right after this final dip happened in mid-June. And there is definitely correlation with this 10 to 100 line. It's not just the 100 to 10,000. And recent talks with some of our partners, we've actually learned that there's quite a correlation that might even exceed the 100 to 10,000 addresses. There's an argument to be made for any of the 10 to 100, 100 to 1,000, or 1,000 to 10,000 Bitcoin tiers being good alpha. But I think this is really cool to see, because over the last 2 years, you can see how they took profit into this then all-time high in April 2021. They started to buy the dip after it dropped down, took a little more profit. They were actually accumulating into this final all-time high. And this is where I think the larger whales are a little bit better predictors. But you can still see that they finally gave up on buying the dip about a month after the true all-time high that happened in November 2021. And they were dumping throughout the, kind of leading the way, just like the 100 to 10,000 and 100 to 10,000 addresses. And they didn't start accumulating until right after the dip, and they haven't been too hurt on this accumulation cycle they've been on. So that's very interesting. I think that overall sharks and whales in Bitcoin are easily a top 2 or 3 indicator in all of crypto. And if you follow the cumulative behavior that they're displaying, it'll lead to good results. And they are showing a lot more bullishness right now than bearishness. So it doesn't mean that prices are going to start bouncing tomorrow or next week or even next month. This has been a 6-month, accumulation cycle without really anything happening. But you can see that they started accumulating as prices were at least slowing down on their absolute implosion that we've been seeing throughout 2022. So that being said, let's shift our attention to stable coins here. And we can see that Tether, sharks and whales that are holding anywhere between $100,000 to $10 million, started their accumulation right around the same time that those Bitcoin sharks we just looked at were accumulating themselves, and they were holding about 28.3% of the supply of Tether on July 15, 2022. They're now up to 31.6%. So that's a lot. That's a pretty big accumulation there. But that's not the story. You can see that there's much bigger stablecoin accumulation behaviors going on, such as BUSD, Binance USD's or Binance's native stablecoin. And beginning on March 10th, we're looking about 9 months ago, the amount of Binance USD held by the 100K to $10 million holders has gone up 437% in holdings. So absolutely massive there. But we can do even better. Let's look at DAI. 17.56% held back in February, just about 10 months ago. They have added 20% more of the supply, doubled their holdings, a little more than doubled their holdings, I should say. At the same time, you can see that USDC, 17.3% more of the supply was accumulated by this key shark and whale tier, and that amounted to 78% more held now than they did back in February. So that's just what this is showing, is just the amount of buying power and available, essentially dry powder that by these sharks and whales, that indicates that it isn't just a whole bunch of institutional and massive whales that are getting out of crypto right now and just putting it in fiat. They absolutely still have crypto. It's just in stable coins right now because they're waiting for the right time to put their money back into, actual volatile assets like Bitcoin, Ethereum, XRP, whatever the case is. We would be most worried if, Bitcoin was being accumulated by these millionaire traders, but stablecoin holdings were going down by millionaire traders. That's not the case. Both Bitcoin and stablecoins are being accumulated right now, which indicates that there is money, fiat money coming in, going back into crypto. And so this massive price drop over the past year plus isn't just a result of whales taking all of their money out of crypto and saying, all right, I'm all done. It's basically just them waiting for a better time to buy at the price they're comfortable, or just the circumstances in the markets that they're most comfortable investing under. So that's a little snapshot of what's going on with whales. And I really think it's an important point to be made. And I hope you guys value that kind of data here. I want to check on questions really quick just to see if anything has popped up here that I might be able to answer before transitioning. I'm going to take a sip of water because I'm going solo today and I'm talking a lot. We have a request to review quant, and I will absolutely do that. That'll be the first asset we look at. In case I forget, Max, please remind me. Besides that, okay, so no major questions, just a few questions about the app itself. Let me go back and look at some other things here I wanted to point out. So we talked about Bitcoin and stablecoin whales. We talked about Ethereum whales. Social dominance still looking low for Bitcoin. How about funding rate just over the past month? What this is going to do is give us an idea of how traders are actually putting their money where their mouth is. Are they just talking positively or negatively about crypto right now, or are they talking a certain way and placing leveraged, perpetual contract trades down for the purpose of trying to bet in favor of Bitcoin's price or against Bitcoin's price. Generally speaking, the more perpetual contract funding rate is in the positive territory, the more likely there will be a correction. The more it's in negative territory, the more likely there will be a price bounce, as liquidations tend to happen. Right now, there is not really much going on here. It's pretty flat for Bitcoin. It's certainly not the case for a lot of altcoins. You know, even though Bitcoin and Ethereum looks a lot like this and it's been pretty flat, take a look at our funding rate model that I prepared. And what this does is it'll show how high or low the current average exchange funding rate is on different exchanges. We can see Bitcoin right here, just as the sand-based chart showed, pretty much neutral. Ethereum, as I mentioned, pretty much neutral. 0.01 is, you know, even though it's showing a red bar, that's about as close to neutral as you can get. And it's often just a resting state for a lot of assets when there's not a lot of huge positive or negative bias in the market. But you can see plenty of green bars here. Let's take a look at some of the assets that are being heavily shorted. We've got Axie Infinity, Basic Attention Token, Dent, Digibyte, a lot of assets that really haven't been in the news much in a couple of years. Harmony, Helium, Monero, Ren, which, by the way, Ren is having some serious talks about ceasing to exist in the near future. I guess Alameda, I wish I knew the explanation better, but Alameda was heavily in Ren, and due to their implosion, Ren got hit hard, and I think a lot of coins got lost, which isn't necessarily the worst thing. Sometimes coins getting lost can be good because it means the amount of available coins are more scarce. But I think there's some issues with Ren no longer being developed as a result of that and a few other things. So Ren is being shorted, and so far people who've been shorting that one are actually being rewarded. And I checked, and there's not much development activity at all going on for Ren. So that is a concern if you are holding Ren. Definitely do your own research and check out whether you still think it's a good investment or not. Tron, negative funding rate for sure. Waves has had pretty consistent negative funding rate, but check out how a lot of it's been one of the best performing alts over the last couple of days. So a lot of shorts are actually being liquidated. I checked yesterday and Waves was actually off the axis. So a lot of people were shorting it and getting burned as a result. And typically after those liquidations happen, you see this funding rate eventually go neutral again, or people even try to long it after seeing that it's going up. And then it flips and goes, the price flips and goes down. And we even see Zilliqa here also as a shorted asset. So long story short, if you want to try a particular trading strategy, you can absolutely use our funding rate sand sheets model, which is available to anyone with a Sandbase Pro membership. Just make a copy of this, plug in your own API that's provided by us when you get a Sandbase Pro membership. It's super easy, and you can just check in on this kind of model anytime and potentially, you know, shape your portfolio around the assets that are getting the most heavily shorted and avoid the assets that are getting most heavily longed. And that is a viable strategy if you can really keep up with the ever-changing funding rates going on. All right, what else? Really curious what you think about how QT affects Bitcoin price when spending is dry right now, or do you anticipate QE to be around the same time as QE? Our staff said, Max here said, I think the FTX hacks are very much overshadowed by the general bankruptcy, unfortunately. Yeah, I mean, I to be honest, I don't think I am researched enough to have an opinion on how QT will affect Bitcoin's price. Maybe we can talk about that offline, and I'll go over that with you, CryptoChick. I think that's a really interesting question. Let's see. Okay, why don't we look at some of the on-chain metrics going on for Bitcoin, and then we'll get into quant and a few other requests. So let's go to the past year and check out what's going on for volume right now. We can see here the gray bar is the overall trading volume for Bitcoin. It obviously had its biggest spike by a large margin just as FTX was imploding about a month and a half ago, and then it quickly dropped back down and is back to not just neutral territory. I'd argue this is actually some of the lowest trading volume we've seen over the past year, which is very interesting. Outside of maybe, late January, early February, we haven't really seen it much lower than this. And actually, this was not a bad time. So trading volume isn't necessarily a bullish or bearish indicator, but what trading volume can be useful for is seeing how interested traders are in the direction of price at any given moment. For TA traders out there, you're probably well aware that when price direction is moving one way and you see trading volume rising into that price movement, it generally is indicative of that price direction continuing. Whereas if price is moving one direction and trading volume is starting to dry up, it means that a reverse in that price is likely to be impending. Now, because price has been essentially flat, there's not much we can really interpret from this other than the fact that traders are simply dropping out. There's people are afraid to make moves in either direction. And to me, that is a positive sign in a flat market right now. When you see trading volume dry up, it's indicative of fear. It's indicative of FUD and hesitation from traders who don't want to get burned. The downside is you need to see utility in order to justify a long-term bull run. So if we started to see a little bit of a rise, whenever that happens, you want to pay attention to what trading volume is doing, because if it doesn't start to rise as prices do, that just shows that there's still a lack of interest, and utility is not going to be rising along with prices. And we need that in order to continue those price rises, as I mentioned. So besides that, transaction volume in both BTC and USD, they are extremely low right now. These are definitely the lowest levels we've seen in the past year. And pretty much same explanation. That would need to rise as prices do. So, eventually when we see some sort of attempt at a bounce, try to look at these three metrics as validators that bounce can have some legs to it and not just be a dead cat's bounce and come right back down from a lack of interest. Daily active addresses and circulation, not too much to say here. Daily active addresses has been hovering. Currently, we're seeing about, looks like around 925,000 addresses, unique addresses interacting on the BTC network per day. That's about average over the past year. It kind of peaked around here where we were seeing just a little over, close to 1 million, about 976,000 addresses per day. So we would want to see this rise over time, just like trading volume. It'll justify that prices are going to continue rising. And then circulation, this one is not looking good at all. The average amount of BTC circulating on the network is at its lowest point over the past year right now, with just about 112,000 or so BTC moving per day. We have a Sandsheets model here that'll validate that circulation is not looking good. We want these bars to be low. Low bars equal bullish divergences, high bars equal bearish divergences, and then it adjusts based on 4 different time frame trend lines, where if you are getting less circulation, it's dividing circulation divided by market cap. So if there's a wider gap, that means the bar is higher. And if there's a lower gap, the bar is going to be lower and show that there is more circulation compared to the current market cap right now. So right now there is way less circulation compared to the current market cap, even with the market cap being much lower than it was back here at the all-time highs. So even though prices have dropped, market cap's circulation has dropped even more proportionally. So we're on our 1, 2, 3, 4, 5, 5th straight month of what is likely going to end with another red bar here. And we can see over time that most red bar stretches equal further declines, which is why we really, really need to see some better signs from Bitcoin's NVT right now. And until that changes, got to be a little bit hesitant of calling for any sort of bull runs. But it's kind of a self-fulfilling prophecy where once we get enough traction and prices go up, traders can very quickly turn the circulation into a green bar once again, and then pump prices just by their own, cumulative money coming back into the collective networks. Okay, so besides the volume, active addresses, and circulation, let's see what's going on with MVRV, which is extremely important because this is reflective of average trading returns. When we see super negative average trading returns, it likely will foreshadow that a price turnaround can happen and markets will move up. Vice versa, we don't want to see really high ones because that means that average trading returns are too high in a zero-sum game and prices can come down. Right now, as of November 9th, this is when we were at our lowest right after the FTX implosion. 30-day MVRV in red here got down to negative 18% before rising back up. And it's about dead even right now, negative 0.2% average trading returns over the past 30 days. So that essentially means prices can break either way. However, on the long-term time scale, which we've been talking about for quite a while now, as you can see, going back to June, there is still a lot of making up to do on the 365-day MVRV, where average trading returns are currently at about negative 32%. So for the patient holders out there who are more on a long-term time scale, this is still a good sign that things can turn around and prices can move up. Like we said, though, we still need to see better circulation and better utility overall to justify that a turnaround can be long-lasting. We already went over funding rates, so I'll skip this one. Take a look at whale transactions continuing to stay very low. It's really just continued to decline throughout the year. You can see the yellow representing $100,000 or more transactions per day over time, going down. The red one not looking much better. This is $1 million or more. I mean, they're pretty much in the same spot. They've just declined over time, indicating there isn't a lot of whale interest now. However, remember that those stablecoin shark and whale addresses are continuing to get larger and larger in anticipation of, being able to buy at the right time and pushing up prices. But for now, Bitcoin whale transactions are not showing much interest, and that kind of reflects just the overall amount of circulation being so low right now. What else do we have? We already talked about supply distribution, so we can skip that. One thing to mention, check that out. The 100 to 1,000 BTC addresses, the amount of them has really, really improved since November 19th. We're looking about 5 weeks here where the amount went from 13.7K to about 14,000. So there's been about 370 of these addresses created just in the past 5 weeks, and the amount has improved by almost 3%. So that would be a strong sign. It would be better if the 1,000 to 10,000 wasn't continuing to decline. But look, right around 2.5 weeks ago, all three are going up together. So these are the three key Bitcoin address tiers that really foreshadow price movement. And there is more and more of them collectively, no matter which tier you look at, since 2.5 weeks ago. Ratio of daily on-chain, transaction volume, and profit to loss. I'll come to that, back to that in just a moment. Mean dollar invested age continuing to move up. The average amount of days in which Bitcoin has been sitting in addresses has now exceeded 500 days. And I believe this is the first time in history that that's happened. If I just quickly go to Let's do all-time, go back to 2011. Yeah, so this is the most dormant that Bitcoin investments have ever been right now. It's never been above 500 days. Uh, we want to see that improve pretty quickly because all of this stagnancy does lead to bear markets and flat markets just continuing indefinitely. But as soon as we start to see a turnaround that looks a little something like this, that's a great validator of a bull market beginning. Go back to 6 months. You can see also the amount of network realized losses continues to accumulate without much realized profit at all. You can see the positive spikes are pretty few and far between, but look at all these realized losses that are adding up. This is just a lot of addresses that are trading and getting out of their positions at a loss and giving up, capitulating. That is an ingredient for long-term success and um, market rises, given enough patience. So what we wouldn't want to see is all these drops happening while there's a lot of realized profit happening, and that's not the case. It's a lot of realized losses, which is a good long-term sign. Supply on exchanges has continued to go down. We have seen just a slight tick up over the past week or so, but it's barely anything to bat an eye over. The fact of the matter is, you know, 6 months ago we were at 9.6% of Bitcoin on exchanges. Now we're at 6.04. We actually got briefly under 6% for the first time in about 4 years here, back on the 18th and 19th. And as long as it stays low, that is an indication that there's going to be a limit to how many massive sell-offs can continue to happen in Bitcoin, because for the most part, Bitcoin has to be on exchanges in order for a big sell-off to happen. When there's less Bitcoin on exchanges, there's simply less Bitcoin to sell off. Social volume and dominance staying pretty low. As mentioned, social dominance really needs to improve for Bitcoin. And until that happens, it's just indicative of a little too much hype around altcoins when there probably shouldn't be right now. Nothing special on weighted sentiment, development activity going a little lower. Bitcoin's development activity is always a little interesting because devs are pretty under the radar, and all we have is the GitHub that we can check out. But yeah, I wouldn't worry too much about this unless Bitcoin's development activity somehow goes to zero all of a sudden. Okay, and as promised, let's take a look at the ratio of profit to loss. Okay, so we're looking at the weekly view of both Bitcoin and Ethereum, and generally you want to see low ratio of on-chain transaction volume and profit to loss, because that will indicate that there's a lot of trades happening at a loss, just like we looked at with realized profit loss. We want to see that this stays low when people are getting out of their positions with less money than they started in, as a sign of weak hands dropping out, which is an ingredient to prices moving up. What we don't want to see are spikes like this, which happened right before the pullback. That is not a coincidence. And then more recently, over the past week, we've seen that it actually was negative for both Bitcoin and Ethereum. This is actually a pretty significant loss ratio for Bitcoin, especially. We've only seen it get this low 2 other times over the past 6 months, and these led to a price bottom, and then prices rose after that. So I would consider this a good sign. You know, Bitcoin is still negative as of a couple days ago when this new week cycle started on this chart. Ethereum is just slightly over in the positive territory, but I like the look of this. This shows that there could be a little bit of a bounce before the end of the year. I wouldn't say it can be significant, and we've seen plenty of times where this ratio has been negative and prices still dropped. But you know, given the probabilities, there is a larger likelihood of a rise after a week where there's a lot of capitulation and weak hands trading out of their positions. All right, so we're about 55 minutes after the hour. I promised quant we could look at. And so we'll go ahead and do that, and maybe we can answer a few other questions or asset requests before we conclude this final call of the year. QNT. Let's see what we got here. So quant has been an interesting case where it had a big individual rise here back in mid-October. I remember it quite well. I can even illustrate with the price versus Bitcoin. And yeah, you can see how, let's see, between late August all the way to, this was over about 2 months, all the way to late October, the price against Bitcoin went up 126%. The overall price went up about 94%. So that's huge. But then it's dropped down ever since. We had a turnaround sign right here where trading volume and transaction volume really spiked hard. We saw a bit of a bounce. We saw one more spike here that really hasn't led to much. And right now, everything's kind of neutralized. So I wouldn't say there's too much going on in terms of volume and transaction volume right now. Daily active addresses and circulation. See what's going on here. Yeah, we had that same big spike and the same smaller spike happen in mid-February. This is actually a pretty decent sign. I'm seeing that daily active addresses are still quite high compared to what they were throughout the past 6 months. And that means there's still a lot of utility going on here. And even if prices are moving downward, just like the rest of altcoins, I can guarantee that a lot of altcoins are not having this resurgence in active addresses and circulation the way quant is. So this is a positive sign that it could be a better breakout candidate than most altcoins going into 2023. MVRV, it does look like there is some droppage in the midterm 30-day average trading returns right now. That's how it looks for most altcoins right now. So this certainly isn't unique to quant, but yeah, I would say that it's a good sign that both the 30-day and 365-day MVRVs are well in negative territory right now. No funding rate data for quant right now. We do have whale transaction count data, which shows not a whole lot. It looks like there hasn't really been any $1 million plus transactions since the 20th. So yeah, we look for like a spike like this as a sign that there's about to be a price turnaround. We can see that there was a huge $1 million plus spike here, and then prices bounced, and then there was a huge 100K plus spike in whale transactions right at the top, and this would have been the sign to get the heck out of quant and take some profit. For now, though, not a lot of turnaround signs of any kind. Let's take a look at whales and see what's going on here. Immediately, I can see that the 10K to 100K quant addresses are accumulating. The price is at $106 right now. So we're talking about just about $1 million to $10 million in quant holdings by this address tier. So there's 158. It has been going up over the past 5 weeks quite a bit. If we go down to 100K to $1 million, yeah, there's been a nice accumulation there too. If we go super high, these are mostly just the exchange addresses. So I don't put too much credence into this one. If we go a little lower, yeah, we can see that there are a lot more addresses that have been created here. If we just merge all three of these really quick, these are the sharks and whales. So since the FTX implosion, right around the 7th or so, we've seen 1,087 more shark and whale addresses created for about a 14% rise since early November. That's a lot. That's a very good sign. Looking at the percentage held, doesn't look quite as good here. The percentage held by these sharks and whales. Yeah, I mean, it's still going up collectively. 55.11% held on November 4th. Now it's up to 57.6%. So there is some argument that that the powers that be in quant are beginning to accumulate once again. It isn't a massive accumulation, but it's certainly gotten the percentage held back up to where it was in early July, and I like to see that. Nothing really to be said there. Not a lot of dormant movement. We've seen a few blips where some older quant addresses are moving a tiny bit, but overall the line continues to rise here. Change flow balance. Let's see if there's anything here. Yeah, not really anything special. We do see though that the supply and exchanges of quant, let's go back to 2019. Yeah, so this red area chart, let's get rid of this one. This red area chart has been going down massively since November 5th as the whales have been accumulating. So since November 5th, we've seen the supply of quant on exchanges go down 3.5%, and this is about 28% less than what was on exchanges just 6 weeks ago. So that's huge, and it's taken the supply on exchanges down to its lowest point since January 2021. I like the sign of that a lot. Social dominance relatively low. That doesn't mean much. It just means it's pretty under the radar at the moment. Weighted sentiment, it does look like there's a little more positivity going on. I'm a little concerned about this one because the last time we saw social dominance this high, we did see a big correction right at the top. So a bunch of people got really hyped about quant here in mid-October when it was going on that huge run. And then immediately they got punished for that and prices retraced. The difference is there's not really any pump going on right now. So it could be the opposite, where there's a lot of talk about quant because of an extended drop. But I wouldn't put too much into this because altcoins in general are all dropping right now. Just be aware that it can be a big top signal when you see a big spike in social dominance as prices are pumping, or weighted sentiment, I should say. Development activity, not a lot going on. Keep in mind, guys, the fact that quant is not one of those altcoins that gets significant contributions from its devs. There is not a lot of innovation going on in terms of quant's foundation. And one may argue there doesn't need to be, but generally in altcoins that see great long-term growth, you see consistent upgrades and team contributions on the asset's respective GitHub. That's not the case with quant. All right, so that's quant. Great suggestion. I'm seeing a lot more positive signs for it than negative. Balaresh, do you have any other questions that are popping up in our chat?
Yeah, let's maybe do Solana as the last coin.
All right, let's do Solana to close out the year. If you're hoping to see as many metrics as we saw for quant, you are sadly out of luck because Solana's blockchain is not ERC20 and we don't have the individual Solana blockchain data set up yet. However, there are still some metrics we can look at, such as trading volume, which is very low. In fact, it's the lowest it's been since the summer of 2021 right now. And that's not great. It's not the worst thing in the world. You know, we can still see spikes happen despite not a lot of trading engagement. But overall, you know, being under $12, it's just not grabbing traders' interest the way it was back here in late 2021 as Bitcoin and Ethereum were getting their own all-time highs. Nothing here, nothing here. Funding rate, we should have some stuff. Okay, this is interesting. So Solana has been wildly leverage traded over the last couple of years. We see that it was relatively long biased back here in October 2021 as people were trying to ride up the wave. And then it flattened out as all of crypto started to make its correction. And then check out what happened. Right as FTX imploded, we saw massive shorts going for Solana. And most of them actually got rewarded because prices didn't really bounce at all. And now we're actually seeing one more stretch of shorting going on Binance specifically, and a little bit on DYDX too. So people are not believers in Solana at all, and they're trying to ride the wave down and profit off of that. I wouldn't be surprised if this triggers some sort of price spike at some point to cause some liquidations. But for now, the shorters are doing well and actually making a profit off of Solana's demise here. I would be worried about trying to open a short now, considering how many have already been running for the last 3 to 5 days or so here. Get down to social metrics because we'll have a little bit on that. So over the last couple of years, you can clearly see when the tops were being signaled. You see a huge wave of social dominance spike right here, and then prices temporarily corrected until it went back down again. Same thing here. Not a lot of huge spikes right at its all-time high, but shortly after, you can see on this second bounce that people were trying to ride up, the amount of discussions related to Solana exploded, and that signaled a top. We had one final stretch, but you can see that it just did not have legs to continue. And then the latest, if we zoom in here to the last 6 months, this was interesting. There was a big social dominance spike as prices were dropping, which signaled that prices could rise, and it did so. And then there really wasn't a big interest. We had a little bit of a social dominance spike here in early October, but nothing really came from that. And then massive social volume spike and dominance spike here at the point of the FTX implosion that did not result in a big price bounce, maybe a very small one briefly, one can argue, but it's starting to just come back down and stay very low. So the interest level in Solana right now is quite suppressed, probably the most it has been in the past year and a half. And that's really just indicative of Solana being really forgotten about and not being heavily traded right now. One can argue that they're a little under the radar because of this, but without much blockchain data to show whether like whales are accumulating, it's hard to say whether there's some potential things happening by very large traders where they're getting ready for a big price push. I would say that there's a slight argument for prices going up in the near future because of the fact that shorts are starting to get large again for Solana, but it's, we don't have enough data on Solana to say definitively that it looks really solid the way Quant kind of looked. So keep that in mind, and that's about all we can share for Solana. So yeah, I think that said, guys, we can stop there. By the way, Solana is still getting good development activity. It's getting about 40 GitHub submissions a day, which is a good sign. So don't think that there's the team is abandoning Solana and they're getting ready for some sort of rug pull, according to GitHub at least. But yeah, I think that's a good stopping point for our stream here and for 2022. Of course, by no means are we going to be unavailable for the rest of the year. If you're in our Discord, maybe Max, you can give a link to our Discord if you don't mind. We can continue the conversations there. I'd like to talk a little more on that one question that I don't really have enough information on to answer on the stream. But any other questions that pops up before the year ends, guys, feel free to jump into our Discord and let us know what's on your mind. We'd love to answer. Spread the word about our videos, spread the word about our Twitter posts. We're always trying to give informative data about what's going on in the markets to give accurate predictions using data as to what's going to happen next. And that's something that not a lot of other companies are able to do because they're mostly relying on support and resistance levels or rehashing the same news they're seeing from other platforms. That's not something we do. We really try to give our own organic data to our users as much as possible to give the best ideas of where markets are going to head next. So that said, thank you all for a wonderful year. Not so much in crypto, but at least in terms of Santiment support, it's been a pleasure chatting with you guys and going on these streams. And I'm not going anywhere. I'll be on for plenty of streams in 2023, and looking forward to seeing many of your questions and presences here in the chat. So thank you all on behalf of Santiment. Thank you, Balresh, for running some great streams this year, and I'll talk to y'all soon.